Hello everyone, welcome back to this week's Technical Insights. US equity indices closed lower on Friday after hitting new record highs as investors took some profit to end the positive week centered on Donald Trump's call for lowest interest rate and cheaper oil prices at the World Economic Forum in Davos. The Dow Jones Industrial Index dropped 0.32% or 140 points to close at 44,424 points. Broad index S&P 500 lost 0.29% or 17 points to close at 6,101 points. Tech-heavy Nasdaq Composite Index fell 0.5% or 99 points to end at 19,954 points. The S&P 500 had also closed at a record high on Thursday after hitting fresh intraday high on Friday as well before closing lower. Technology stocks saw the biggest drop on Friday. Some of the mega tech stocks that helped drive the market to an all-time high have also pulled back. Nvidia slipped more than 3%, while Tesla fell more than 1% on Friday. During the week, Trump's pro-business policy has largely pushed risk assets higher as investors focus on his inauguration. Markets were also relieved that there have only been threats on the tariff front so far instead of formal actions during Trump's first few days in office. For the week, the Dow Jones Index rose 2.15%, while the S&P 500 and the Nasdaq added around 1.7% each. All three major US averages posted their second consecutive winning week, signaling that the bull market is back in full force after the December pullback. Donald Trump said he would demand that interest rates drop immediately when addressing world leaders in Davos, and he would ask Saudi Arabia and other OPEC nations to lower the price of oil as well. Looking ahead, we have a busy week with more companies reporting their earnings, including mega tech stocks like Microsoft, Meta Platform, and Tesla reporting on Thursday. Fed Fund futures are also pricing in a more than 95% chance that the Fed will leave interest rate unchanged at the next meeting on the 29th of January. In Asia, Hong Kong stocks capped off a week of gains, tracking the US rally that was triggered by Donald Trump's demand for more rate cuts and his optimism about the US-China relation. The Hang Seng Index rose 1.86% on Friday or 365 points to close at 20,066 points. And the Hang Seng Tech Index also rose 3.15% or 142 points to finish at 4,657 points. Trump emphasized the importance of fair trade practice with China, suggesting a potential willingness to cooperate with them. Sentiments were also upbeat after Chinese regulators told insurers and mutual funds to buy more stocks, and the Chinese market was supported by strength in high dividend shares, who are the beneficiaries of Beijing's plan to introduce long-term funds estimated at 1 trillion yuan in fresh capital each year. The Hang Seng Index advanced 2.46% for the week, marking its second straight positive week, and the Hang Seng Tech Index also jumped close to 4% after last week's 5% gain as well. Back to Singapore, our STI index was more or less flat on last Friday, holding on to the 3,800 point handle. We are down just 2 points or 0.06% to close the week at 3,804 points, despite all three major US averages ending the week on a positive note. For the trading week, our STI index was slightly down by 6 points or just 0.17%. This was after the 0.24% gain that we saw the week before. And of course, STI hit a 17-year high at 3,887 points, and we are now holding on tightly to the 3,800 point level as we head into the Lunar New Year holidays. Big movers on the STI last Friday include Singtel rising 2.89% and Citrum advancing 1.8%. So for this week's technical analysis, let's look at Singtel. Last Friday, Singtel share price jumped 9 cents or 2.89% to close at $3.20. For the trading week, the share price rose 6 cents or 1.19%, and this is Singtel's second consecutive winning week after the 2.28% gain that we saw in the previous week. From the chart, we noted that Singtel's share price has largely been on an uptrend since the second half of 2024, seeing major gains in the month of September. Singtel shares hit a high of $3.41 in September and is now marking this as a major resistance that investors should watch out for. We could possibly also see a double top formation during the high of 18 October here and the 8 November period here around the $3.26 level, which will be the immediate resistance level for Singtel. On the support side, the lower bound of the Bollinger Band that you see here will provide the first level support at $3.04, with the next support level being the red line that you see here, which is the 200 days moving average at $2.92. On the indicators, the MACD indicator turned positive last Friday, and this could signal the start of a new uptrend. The latest RSI reading was 62, which is a very healthy reading, indicating a very strong and healthy momentum in the uptrend that we see right now. So with both the MACD indicator and the RSI signaling a possible new uptrend, as well as strong uptrend momentum, investors may use the near-term support at the low bound of the Bollinger Band at $3.04 to further accumulate into Singtel shares, targeting the immediate resistance, which is the double top that we see last year at $3.26. Out of 17 analysts that's covering Singtel in the past 3 months, 12 have a strong buy call and 5 others has buy call as well. There are no hold or sell recommendations, and the average target price is $3.73, with a maximum estimate of $4.60 and a minimum estimate of $3.37. And these are the updates that I have for you this week. I hope you find this information useful. So do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insights.